In this very first video, I'll be talking about what are important points in trading. And so the two most important points are structure. And why structure is important is because it allows you to determine the direction of price, where price wants to go at the high time frames, and then you can work it down to the lower time frames. The second point, the second important point would be the entry model, right? Because what we want to do is to identify the proper entry areas so that we know where to place our stop loss, place our take profit, and ultimately let the trade run, and how to manage it, right? So for this video, I'll be discussing more about the structure and how to determine when structure breaks, and how price reverses, and how it will lead us to determine where price is going to go, right, the direction of price. So for this part, right, structure, there's two kinds of structure. One is the reversal structure and one is the continuation structure. So for reversal structure, right, we always see that price makes series of lower lows and lower highs, and when this part breaks, right, price shifts, right, price shifts like that, right? Just to push it here, make it clearer. So when this part breaks here, price shifts up, right? So this is the reversal structure, right? Reversal structure. And for the continuation structure, right, it's actually similar, right? It's ingrained in this chart, right? So for the downtrend one, what we can see is like this, right? So once this breaks here, you know that price is going to continue, right? Price is going to continue, right? So what it does is retrace up and then continues down, and then there we have, right, here another one. And same goes for the uptrend, right? So if price breaks here and this part breaks, which is the reversal structure, then you come down and then go up. So this is the continuation structure here, continuation to go up like this, right? So this is why this pattern is always commonly seen in trading. And so now we will delve into the actual charts to look at how price actually forms, right, using candlestick patterns instead of line charts. So this is gold on the 1 hour chart, right? So as we can see, right, price here is making series of lower lows and lower highs, right? So it's trending downwards like this, right? So how do we identify which part is the retracement and which part is the continuation move, right? So as you can see, right, let's start with this, right, this structure, right? So as you can see, price is dropping down, and then it traces up, right, and then it drops back down, and then it continues up and drops back down, and then price continues up, drops back down, and then here we consolidate, right? This area is a huge consolidation, so I'll just stop the arrow here. So this is a huge consolidation. So which area right here is where price needs to break out, right? If you look at this, right, just now when we say the reversal structure, right, this part is the part that needs to be broken, right, here, this part. So here, how do you identify is over here, right, here, this region, right? And let's take this off. Let's take this off. Yep. So how you want to draw them, right? Which part to break, right? You can see here, zoom into this area over here. How do you know which part is the part that needs to be broken, right? So as you can see, there are two series of like consolidation like patterns over here, and as we can see, right, we always pick the highest one, right, highest one. So as you can see, if this wicks, right, so here we have a bullish candle, here we have a bearish candle, right? So what you want to draw is the area where the two wicks are combined, right, combined. So this area here is all, as you can say, it's like supply, right, supply or resistance, resistance supply zone. And so the the highest area where price should respect, right, if it's still downtrending, is this area over here. So this orange line here. So as you can see here, what price did was respect, and then it dropped back down, right? So here price failed to break, and that's why we still drop down, right? We still drop down. So you might ask, right, like why this area isn't the area that is supposed to be broken, right, here. I mean, it's still a retracement, right? But what you want to see, right, is that price has to make a low and then retrace up and then make a low. So this small bullish candle is actually still part of this one downtrend movement, right? One downtrend movement. So here, as you can see, downtrend movement here. Oops, sorry. And so really, like, why this part is considered as a retracement, right, here, this part is considered as a retracement, is because over here, right, we already have broken this low. So once we broke this low, we retrace back up, right, to this region, right, and so we can consider this as a retracement structure. So if this doesn't form here, right, and then this goes out like this automatically, like this here, go up, this is considered as a reversal structure, right? So how do we draw this, right? Same as this. See, bullish candle, bearish candle. See the wicks, where the wicks combine here. So where price needs to break is this, at the end of the wick, right? So anything below here, below this blue line here, over here, we consider it as bearish, right? Bearish continuation, right? So as you can see, which part is the part that breaks, right? And as you might guess, right, is this super bullish move up, right, on Monday because of the war, right? Yep. So as you can see, if price wicks up here, we don't consider this orange line as the line that has to be broken already, right? Because what you need to do now is to break this wick close above this wick for it to consider it as a reversal structure, right? So to illustrate this point, right, what we should see is this. See here, a closure, then you consider this as a break, right? But if it just wicks and then closes below this line, what you want to do is to have a second candle breaking above and closing above that wick. Then you can consider this as a bullish move, right? So from this point onwards, right, from this orange point onwards, we consider that this move here is actually bullish, right? Bullish. So this is the reversal structure. Breaking this orange line here, from here, then we shifted up because of this wick. Here, breaking here, this candle. On the right side onwards, right, this whole thing is actually bullish now, right? Bullish now. So this is the reversal structure. And how do we determine a continuation structure, right? Price makes a high, right? Makes a high, and then price retraces downwards, right? Price retraces downwards. So as you can see here, this is the major structure. The major structure is that we are going up, right? And then the minor structure is that price is retracing down and then breaking up and then going back up, right? So which area over here do we consider that as a continuation structure, correct? So it will be this area over here, right? So when price breaks up here, retraces a bit, or you can take the entry, honestly, on the closure, you can see that price goes up automatically, right? Price goes up. It's very simple. And so let's say here, you see this, right? So this part here, continuation, right? Once you break above this, you can consider that as a continuation, honestly. But I would prefer to wait for at least 2 bearish candles, right? 2 bearish candles and then go up. But if you consider that as a continuation, it's also fine. You just have to get stopped out over here. But over here, we switch a bit bearish, and so we can take sell entries down over here, right? So how do we determine this as well? We see a reversal structure, right? Because you see, price is making a high, right? Here, price is making a high. Broke this high over here, candle closure, here. And then retrace, take an entry, drop back down, right? Drop back down. So over here, right, this orange line here is the line that has to be broken. So here you can see a wick, so we modify this line, right, to be here. So once this candle breaks down, you can take entries here, and then honestly, this will be a scalp, right? This will be a scalp. So price will retrace here a bit. You can take entries here as well, take entries here. Still valid, right? Still valid, and then TP will be somewhere around here, right? Because what I do for TP is that take the last point, and then I drop it down to this area that is supposed to be broken over here. This line, remember the orange line is supposed to be here. And then the 1.5, and this is my TP1, right? Negative 1.5, and then negative 6.7 is the TP2, but honestly, TP1 is fine. So it did hit my TP1 here, right? Here. So I didn't illustrate this just now, but over here, as you can see, if you pull up this, right to here, right? You can see that TP1 was hit over here, right? TP1 was hit over here. And if you honestly go this back here, and then you draw this up, right, to this area, remember just now, here. This is my area that needs to be reached, which we haven't reached here, we haven't reached here, and so price eventually hit this area, right, TP1, and eventually hit here, TP2. But all this aside, right, so continue looking at price. So now here we say that this is bearish, right? For the short term, this is bearish, like this, and then, so here, would you consider this as a low? As a lower low? Here, this area here. And the answer is yes, right? Why? See this? So this is my last low here. We wicked here, so this isn't counted, but then guess what happens next, right? This bearish candle breaks this wick, closes here, so this is a valid low. So this is a valid retracement, right? So this is a valid retracement. So this is like forming a lower high and a lower low. So when this breaks, right, when this region breaks, what can you say about it, right? Consider this as a reversal structure, right? Here, reversal structure. So when this is considered as a reversal structure, as you can see, when price breaks up, retraces a little bit. If you don't, if you take what like Asian London session, and you miss New York, right, at 12 a.m. For me, it's 12 a.m. right over here. Then you can take entries over here, right? You won't be too late because here it's still part of the same area, right? So if you want to pull up this tool, which is the Fib retracement tool that I use, I just modified the numbers. Place it here like this. It's my TP1, which would have been hit, and TP2, which would also have been hit, right? But once you hit TP1, I suggest you break even, take most of the positions out, and let the rest run to TP2. So yeah, and that's about it for this, right? If you want to continue this, right, you can continue this as a continuation structure. So this part here. Now why did I take this part and not this part, right? Because why? We don't have a low. Price did not break down, right? So this, let's say this is our low, right, after the retracement, right, here. So we go up here, retrace down, come back up, come down here, and then break up, right? So this is still my high point, right? High point, not high low point. High point is for continuation, right? Higher low point is for reversal, right? So in this case, right, if we want to see it, if you want to take an entry here, right, what you have to expect price to do, right, is to go down lower, right? Go down lower here with a candle closure, break up here, and then this will be my orange line, right? This will be my orange line. Retrace up and go down, and go up. So once you see this, right, just pull the fibs up to here, and there you go, right? TP1, TP2, right? So this is for the first video, understanding how structure is important in determining direction, right? Determining the overall direction. Yeah, thank you for watching.